Something you said that I think is interesting and I'm curious about is that public policymakers need to understand why this matters, essentially. Help me understand why they don't today, or in many cases fail to understand the impact that this community has on the overall economy. Because sitting in my shoes, I'm swimming in these circles every day and it just seems deeply obvious, right? We're trying to build world impacting businesses that are going to create gazillions of jobs. How could this not be important to policymakers? But it seems like there's other priorities. Help me understand why it's not.
Well, I think the biggest issue is the other priorities. And first of all, there needs to be an understanding, which I had to learn from my experience with the ACA. There are different committees that focus on different areas. So to think that you can go up and talk to 500 something legislators and get them all to agree and to understand, a lot of them don't want to understand that little piece of the world. So we'll deal with the Banking and Finance Committee and other areas that are specifically related to the early stage capital needs. So one of the issues, though, that sits there is that whatever committee you might focus on, say we were an agriculture group and we went and focused on an agriculture group and convince them of all the great needs that are there. Well, there's other groups that are talking to the Banking and Finance Committee about the needs for the early stage capital. So you've got this natural conflict. There's so many different priorities that are out there that when you try to get something through congressional authorities and then through the president ultimately, it's hard to get as many things there. So you have to just focus on your little piece of the world, make sure they understand why that's important, and hope that what you need resonates with enough people that they can make that a priority for everybody. So there's a group of people that really need to understand the basics of everything you do and the reasons they exist. And then they have to be able to convince others that this is the case. Because as with everything, there's a lot of different perceptions for things. So you could talk to somebody that's really in the know about early stage investing, for instance, and they could talk to other people that don't know that. If they can't relay your message the way you would relay it to that person, if you had an opportunity to speak to them, the message gets lost.
Yep.
So it's a lot of repetition and doing this over a period of time. So people in authority know what the issues are. And then of course you have turnover in government also. So you're constantly having new people that you need to bring up to speed.
As you may have noticed, we are recording this conversation live from the Angel Capital Association Annual Summit. Now, if you're not familiar with the ACA, this is the world's largest professional organization specifically designed for angel investors. So if you're serious about this ecosystem or just generally interested in learning more, the ACA's education, resources, and community are definitely worth checking out. You can go to angelcapitalassociation.org. And I gotta say, this is our second year live recording in the room, and I had an absolute blast. Cannot wait to come back for future years, and I hope to see you there. A quick note before we continue the conversation. Alongside the Diligent Observer podcast and newsletter, I also run an outsourced operations service specifically built to serve angel networks. My team handles things like initial screening, social media, newsletter prep, platform management, and a whole lot more. The kinds of things that either aren't getting done or shouldn't be done by busy community leaders. If that sounds interesting to you, send me a note. Now, back to it.
So tell me a little more about, just tactically, over the last several years, you've been involved in this community through the ACA. What are some of the specific efforts and maybe some of the outcomes that you've seen from the work that the ACA has done to advocate for the early stage startup community?
Yeah. So first I'll go back to where I said dispassionate, and I'm not even sure that's the right word, but nonpartisan, I would say. So there was a provision in the One Big Beautiful Bill that we had worked for a long time. We didn't know it was going to be in the One Big Beautiful Bill. So whether I care if the One Big Beautiful Bill is passed on a red side or a blue side or a green side, it doesn't really matter. And how I felt about the rest of the bill doesn't really matter. It's what is the part that we would like to see put into law. So in the One Big Beautiful Bill, there were provisions for the Qualified Small Business Stock Credit. And the Qualified Small Business Stock Credit is something we focused on a long time. It's something that's really important for early stage companies to be able to raise funds. Because what it is functionally a way for the government to help mitigate some of the risks that investors are taking to invest in that class. So when you think of the early stage class as being the most risky, you're going to have it's just natural. A business starting out, there's no guarantee to success. And if you invest in that business, it's more risky than putting my money into Apple. So there's got to be something that balances the returns. And it's not just the returns on capital you might get, it's the added incentives that the government can provide by something like qualified small business stock. So if a business was held, an investment was held for 5 years, you would get to take advantage of all the other criteria were met of a tax advantage from that investment. The problem with it was that some business decisions were being made because it had a 5-year cliff. So what the law previously was that you had to hold your investment for 5 years. What we had endorsed was putting in a phase period where you can get a partial credit after a shorter period of time, because the catastrophic thing for a business could be that you have a sale opportunity, an exit opportunity after 4 years, and it's an attractive exit opportunity, but you have some investors that are saying, I don't want to sell because we hold another year, we're going to get advantage of QSBS. And there are all kinds of decisions that were made for tax reasons only, whether it's with QSBS related or any other walk of life, that backfire. It's great to try to save taxes, but it shouldn't be the primary thing that drives a business decision. So if somebody is trying to sell a business after 4 years, they say, no, I'm not going to sell it. They hold it for that other year. You have no idea what's going to happen in that last year. And it's a totally different decision if they're looking at it saying our investors are going to get 75% of the credit if we sell now versus 100% if we hold it another year, versus they're going to get 0% now unless we hold it for another year. So it just made for more rational decision making, and it was just one of those things that was a technical change in the law, but it wouldn't have come about if it weren't for efforts of groups like the ACA letting legislators know why this is something that's important.
Thanks for listening to this episode of The Diligent Observer. I'm your host, Andrew, and if you're an angel investor looking for essential angel intel in 5 minutes every week, I think you'd enjoy my newsletter. I send my best stuff, interesting deals, and more straight to your inbox so you never miss a thing. Subscribe today at thediligentobserver.com.